So let's look into this. Can you see the screen right there, Eric?
Yeah, it's a how to trade with no emotion.
Alrighty, perfect, good. Let's do this for a second. Okay, here's a chart. Will you buy, sell, or not do anything?
Teacher, right now?
Yes, based on the current candle right here.
That's already up a lot. So quite attractive. I can buy.
So will you buy?
Yeah,
All right.
it's like I think it feel like 50-50. The risk is also quite. Yeah, I can buy.
Okay, so you'll buy.
Yeah.
All right. All right, so this is now what's happening. What will you do now there, Eric?
I'll hold.
Okay, you hold. All right.
Yeah, here I think it depends on the, if I'm only trading one contract, probably I'm out.
Okay, so you want trading one contract, you're out to close. Okay, all right. So from there, from 27, say 16 to 27, 24, and 27, 26, that's 10 points, so 40 ticks. Okay, how about right there?
Yeah, if I have two contract, I'll one contract, but I'll stay holding another one.
Okay.
Yeah.
Alrighty.
Yeah, I need to look at the left though. Little bit. Is there any? Yeah, it's good. Probably I'm out.
Okay,
Yeah.
all of it?
Yeah. If
All
I
right.
have two, I'm out now.
Okay.
If I have three, I'll out two, I'm say holding one more.
Okay. What will you do now, Eric?
If I have three, I have one left. So that last one is I already moved up my stop at break even, so I'm still holding.
Okay.
Yeah. Oh. So I think, yeah, it keep going down. So.
What will you do now there, Eric?
Well, I have my stop is at break even point, so I'm not going to lose, so I can just
Hold it.
Yeah.
All right.
At my break even point. So I stop out.
Okay. Alrighty.
So I make two trades.
3 good trades. Okay. Alrighty, and then basically that's what happened, right? Here's a question. So if you had 2 where everything is closed, but you had 3, and you said you'll hold the last one, question is, why didn't you close your last position in this candle? Why was the stop loss back to just want to break even?
Yeah, I think I should have moved that just 1 tick below that candle. Yeah.
Okay. Alrighty. Let's look into this. I should have moved. What emotion did you feel when the last one got stopped out? That's break even.
I have 2 wins, so 1 break even. So I'm okay.
Okay. So this whole movement right here with the word should is an emotion of what there. Eric.
Kind of little bit regret.
Exactly.
Kind of
Okay. Should creates the emotion of regret. Okay. So
yeah.
Because one, if you're saying this, what would be in the alternative or solution? Because everything in hindsight, and that's the thing about backtesting, you know, on hindsight or hindsight, everything looks good, but when you're in that moment, it's a bit more challenging, right? Within that moment. So when this happens, what is the solution? We need to find the solution and the learning component. So solution is closing, reacting, and then shorting again. Okay, so this is where we really don't know what we don't know what's going to happen. And so basically this is now where we're at this point in time. Right? So it is this big empty space, which is now the future. It is something that we really don't know. And this is what causes the emotion based on the unknown, which is now uncertain. When there is uncertainty, it creates fear. And hence, when there's uncertainty, this is where people want to have certainty. To have certainty, what do retail traders normally tend to do? Is to wait for confirmation. Correct me if I'm wrong. Is that right or wrong there, Eric?
Yeah, that's right.
Right. So once the use of confirmation is the use of indicators, because indicators create indicator, it's part of the indication. So indicators create an indication to create the confirmation, to create certainty. So once we have that, and this is where we will execute, because these indicators that create confirmation, what does normally happen? Increases the probability. Unfortunately, a lot of retail traders do not trade based on probability. Okay? Because they don't know how to measure the probability. So nevertheless, how can we then trade still where there is a lot of uncertainty in the markets, where it can go up and go down, like this one? It was cruising beautifully. It went up and then it came back down out of nowhere. So this is something that as a trader is always to be aware. It's the awareness. Of what the future could bring, and what is that? It's simply news. That's why news is so important to day traders or traders in general, because what happened here yesterday before midday, everything was news-based. That created the fear in the markets. So news-based, when there's fear, there's going to be a lack of demand, and it increases in supply because everybody wants to get out. So imagine people who bought on this side. So for those who bought on this side, and let's say, for argument's sake, let's insert an indicator. Here you go, simple, moving average. Where is the moving average? Exponential average. Oops. Way too much over. Give me a number, please, of a moving average, Eric.
50.
50? Okay.
Yeah.
Okay. So let me move this here for a second on the side so you can see here. If part of the rule is that to create that certainty using indicators to create a confirmation, and say for argument's sake, here's the entry point. From the point of reference, to get a best price is definitely here, 2704, 2705. That's at wholesale price that you can, the better you can get. Here, you're in a retail price. So what is the distance between 27? Just will make it easier in terms of calculation. 27 flat, 2,700. There's 27, 25, 27, say 40, 42, 45, 27, 45. But in actual fact, the high is 27, 44.6. So let's make it 2740. 2740, 2700 flat, that's a 40-point move. And person is getting at 2720. So that's 50. That's basically at equilibrium. So it's 50-50. And hence, so what happens here now is a creation of a 50-50% chance of winning in terms of probability. Because this is where the confirmation has stated. So just imagine now the risk from a point of entry at 27.25, 27.20, sorry, 27, what's the number right here? 27.25. So if we're dealing here with risk, is now equivalent to 25 points, and 27.40, this is now the reward, is now from 27.25, 40, 15 points. It's not even a one-on-one relationship. So what if the rule of the trader is giving a 2-to-1 reward to risk ratio, right? 25, that now means 50 pips from 27.25, 27.25 plus 50, 27.75 is the major target point. 27.75, which is way up there. Okay, now, what if the rule is a 1-to-1 relationship? So 25, 27, 25, 27.50. 27.50 is the target point. So the person who is over here is now saying, well, I have another 8 points left, then T1 will get taken. Person's waiting, 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 and then all of a sudden, price now basically drop. Oh, it's okay, it's just a correction. And then here he's now hoping, oh, it's still fine because it's still above the moving average. And then now it crosses the moving average. And then all of a sudden he got stopped out and lost the profit. So from a profitable trade to a losing trade. Have you experienced that before?
Yeah.
Right? Because of now the hope based on the rule, and then it's not giving you that part of the expectations. So remember, target points are expectations. Expectations is also a belief based on one's perception, based on what they want, right? They want it in terms of the wanting.
Mm-hmm.
And if the expectation hasn't been met, it now leads to either disappointment, to hope, then all of a sudden to irritation because there was now a loss. Rather than looking at things objectively. Okay, so one of the solutions is simply to look at the markets objectively. So at the end of the day, Entries, anytime the system of for entry is always 100%, the result varies based on the location of the price, depending as well on the person's emotionality, mental game, belief systems, rule-based, and so forth. Okay, any questions, Eric?
No.
Okay, great. So let's go back to topic for today. Let's define emotions objectively, and then we're going to look at certain techniques and strategies how to trade with no emotions, and then Q&A if you have any questions. All right. So emotions, according to Wikipedia, if we're going to define it objectively, then it is any conscious experience characterized by intense mental activity and a certain degree of pleasure or displeasure. It is a scientific discourse that has drifted to other meanings, and there is no consensus on a definition. Emotion is often intertwined with mood, temperament, personality, disposition, and motivation. So that's basically Wikipedia's definition. Of course, there's more into that. So there are two types of emotions that every human being will feel: is negative emotions and positive emotions. So negative emotions would be emotions such as fear, impatience, anxiety, impulsiveness, anger, irritation, fear of losing, to name a few. And then positive emotions are happiness, we're making money, joy, love, right? Also regret, by the way, for negative emotions. Greed is also a negative emotion. Disappointment. But for positive emotions would be, aside from happiness, would be confidence, right? All more getting motivated. So these are all positive emotions. So where do emotions come from, though? Well, if you look at the chart earlier, it simply comes from what you see. You're seeing this as a point of entry, then all of a sudden you're seeing this that is now reversing. It's eating up your profits, and then becomes now a negative component from there because of your hope, because hope, and then becomes basically a loss. When people hesitate, and hesitation as well is because now they're seeing something, and what normally happens? Oh, it's now way too high, too expensive, I missed it. So missing out turns out of fear of missing out, right? So by looking at something, or someone told you something, or you're feeling something, then you create a thought. What is that thought? The thought process will be translated as I'm losing, and now hence part of that losing is now being created an emotion of fear that translates now to the feeling of being afraid. And when the person is now afraid, will now create an act of impulsiveness, hence closing now the position if it is not necessary, right? Or the other thing would be they see it, then a certain part of the thought process is that, okay, I missed it. And then the emotion of fear of missing out happens. Or part of that now that feeling will create an anxiety, impulsiveness once again, and they will now either chase the markets through execution or not do anything at all. And it becomes a vicious cycle. If the person simply didn't execute and went the other way, then justification of oneself will come into play and say, I knew it. Knew that it's not gonna go my way, so luckily I didn't execute and I didn't lose anything. On the other hand, if it went the other way, to the direction of what the person simply was forecasting, expecting, anticipating, but didn't execute, then the emotion of regret will come into play. And I should have just entered even 1 or 2. Dang it, I knew it's gonna go up and I didn't do it, right? So those are the emotions that normally traders will experience, including myself. Remember, there's no such thing as perfectionism, and we can basically just learn from it. Okay. So like here, everything is being translated based on what we see, what we feel, and we make part of our decision-making process, and then we make a choice based on the decision-making process from what we can internalize or what we see, hear, or feel. And so that's how it normally works. Any questions there, Eric? Does it make sense?
Yeah, kind of.
Kind of. Oh, can you explain a little bit more, please? Is something that I didn't explain properly? What would it be, please, Eric?
Because I think there's some sort of uncertainty is there, right?
Mm-hmm.
So that's sort of creating this emotion part of it. Like, but if the rules are certain, if there's a lots of back testing and and happen, and based on this indicator, right? There are a lot of back testing has been done. If the system is built on that sufficient back testing,
Mm-hmm.
if the individual is confident in that system, the certainty will be there. So that because of that, the trader will not be that emotional, right? So
exactly. But the question is, what creates then the inconsistency? Why the inconsistencies? So let's take this for example. From here to here, here's the equilibrium. Then this is only the piece of the pie that the trader can make. So here's the profit zone, no more, no less. Profit zone, and then anything below here is losing zone.
mm-hmm.
Right? So if then the person's rule is say for example, there's 3 contracts. here, if 3 contracts and the person is taking it bit by bit, then technically within the profit zone, the trader should close every single position there is to it. Like he or she can close it right there, all 3, or depending on where it's at, any type of 3. So let's take all scenarios. If the trader doesn't want to take all 3 contracts because the target point is right here. So if the target is 2 to 1, trader is now basically, trader is blinded by his or her own set of rules of 2 to 1 reward to risk ratio. When someone is blinded and they want to be right, here is now the emotionality of righteousness, of the belief of righteousness. Oh, I'm going to stick to my rule of 2 to 1. So when someone is blinded by their own righteousness and they're no longer objected by looking at it, oh, great, price is not a level of supply, uncertain, correction is going to happen. We don't know what's going to happen tomorrow, everything, or even the next hour. Then I might as well take my profit right now and close it. But instead of thinking that way, well, I want my 2 to 1 reward risk ratio. It hasn't hit my target point yet. My target point is 27.75. But the market can only give you 27.44, right? No more, no less, 27.40. You got in at 27.25. That's a 15-point move. No more, no less. So based on the profit zone, you will only profit based on these conditions. Condition of what? Condition of abundance. So objectivity and looking what it is. When you're seeing that and you have the abundance mentality, I said, okay, I better get out right now because I don't know what's going to happen tomorrow or the next hour, the next 5 minutes, the next minute, then so be it. So condition as well of acceptance. The person won't profit if the person now is in an emotion of greed because they want more. When the person is being right because of the ego, righteous, then you won't profit based on the profit zone. And then that leads to cascade to hope, lack of trust, and then now confidence gets depleted. And now in the losing zone, which is now irritation, anger, within this zone. Does it make sense there, Eric?
Yeah.
Hence, the belief, once again, to be in the profit zone and the conditioning of a supporting belief is very important. Not just in abundance, also acceptance, it's also the worthiness, the self-worth. And seeing things the way they are or just being present.
Oh, that's interesting.
Right? You see, it happens all the time. And this is where I don't understand. And I know that everybody's busy. I know that everybody gets distracted. And this is what happens in trading. People get distracted. Like, I don't know, maybe 10 people signed up, but you're the only one who shows up. So the question is, why? I don't get it. Why do people have the idea and then they will sign up, but they don't show up? So imagine now, Eric, based on the way how they will also trade. They have the idea of trading. The question is, will they show up when it's time to trade? I bet you it's also inconsistent. You see, everything you see fit here is a translation of one's life. So whatever the end result of the whatever trades that you have is the end result of your belief system that creates of who you are as an individual. So at the end of the day, trading is all about oneself, and it's really got nothing to do about trading systems. Trading system is a tool to find entries, exits, risk management, which is, in my opinion, the most important part in order to maintain consistency of profitability. Any questions?
No.
Makes sense, right?
Yeah, it makes sense based on what you are saying because the conditions, yeah.
Yeah. So how do we get rid of negative emotions? Well, one, we can't get rid of it because it's just part of who we are, part of being human, part of being part of just our being. That's what I'm supposed to say. So if it is part of who we are, then the question is, can we really get rid of negative emotions? Yes, we can, provided that we change our limiting belief systems. So the question once again is, how do you get rid of your limiting belief systems? Well, through coaching, self-hypnosis, learning from the mistakes that we make, and being aware of those mistakes and accepting the change from the learning experience. And then through there is to be aware of the thoughts and meditation. Anything else if you see fit there, Eric? Do you think that we could get rid of negative emotions?
I think make sure the system is working, do back testing enough so that it will help. I think that will help. So the rules based on their well-tested system, that will help.
Okay, it's a constant practice that will create a reaction to thought, right? So let's do a very simple meditative meditation exercise. Whenever you're ready there, Eric. When you sit down, 6 inches based on your feet apart, and then your palms either down, palms up. If you choose to do palms up, connect your finger with your thumb. I want you to close your eyes and take a deep breath, breathing in and breathing out. Breathe in and breathe out. Inhale and exhale. Each and every time you're breathing in all the positive energies around you. And exhale all the negative energies that's inside of you. Inhale and exhale. And I want you to be aware of your thoughts. Whatever thoughts will come into play, just acknowledge the thought, because we can't get rid of thoughts. And then just go back to your breathing. And just focus on being present, nothing else. And if there's any thought of worry, well, there's really nothing to worry, because everything is happening right now. It's just happening right now of you breathing. Breathe in and breathe out. Inhale and exhale. Good, you're doing well, perfectly. The next 3 breaths, each and every breath that you inhale, you're becoming more and more relaxed. More and more relaxed. Inhale and exhale. You are now relaxed. You are now relaxed. Good, you're doing well, perfectly. Just be present, nothing else. And just focus on just sitting down, feeling your weight, the chair supporting you. Notice your thoughts. Acknowledge those thoughts. Feel what's around you. listen to not just my words, my voice. What else is around you? Maybe birds chirping, other people around you, cars moving, other sounds. Just be present, being in a moment. Good, you're doing well perfectly. In the count of 3, you're gonna open your eyes, fully relaxed, energized, and revitalized. Take a deep breath, breathing in and breathing out. Inhale and exhale. 1, 2. You're back to where you're at. 3, open your eyes, fully relaxed, energized, and revitalized. How do you feel there, Eric?
Oh, very good. Yep.
Nice. Did you have any form of challenges in regards to thoughts or any form of emotion or emotions that you were feeling in the present moment when you were meditating?
Some slight heaviness.
Okay.
No particular thoughts, but kind of a little heavy in the chest.
Mm-hmm.
Yeah.
And what is that heavy from your chest coming from, do you think?
Not sure.
So perhaps when you have that, this is now where you go to the next level of your meditation exercise and see where is it really coming from. That heaviness of the chest. That could be some form of either worry, some form of stress, right? And then basically by going through that, then looking into it, because most negative emotions anyway, like worry, for example, is a thought that basically happens that hasn't happened as yet, right? Like say, for example, you're thinking of something like say money, like okay, great, now I have to pay for this, but you don't have enough. So where am I going to get it? And then all of a sudden, the emotion of awareness will come into play. Or, great, my trade is not performing. So it's now the thinking of part of the expectation, what's happening in the future that hasn't happened as yet. And it now becomes fear, or like say within that moment, or it's like, well, I want another $100 on my trading, another 10 points, 40 ticks, another 20 ticks, but it's not giving it to you. And so by having that future expectation, it creates some form of emotion, either worry, could be now be greed. So by getting back to the moment, to the present moment, and then just seeing the way they are, it's like, okay, why I'm being worried right now, it hasn't even happened yet. Why I'm being afraid right now when it hasn't happened as yet. Why am I being greedy right now? And said, if I put that aside, what is it really happening right now? Nothing. When there's nothing happening right now, you're just appreciating and you're just enjoying the moment, then there's nothing to worry about because you're just enjoying just being within that moment, right? Does that make sense there, Eric?
Mm-hmm, mm-hmm.
That's why in trading, the same thing. The future, yes, hasn't happened yet, as yet, but that is what creates the fear of losing, the fear of missing out, the anxiety, the impulsiveness, right? And that creates now a cascade of a cascade and a lack of integrity. Why? Because the person is missing what's really happening within the present moment. When you're missing basically the present moment, then you're now missing exactly what's really happening right there, like here. Okay, great. Price is now top. There's a decrease in force. Why did it decrease in force? Well, price hit a supplier. It's a downtrend. What am I going to do? Close my position. Absolutely. You better take it right now and said worst case scenario, it goes and breaks out on supply, then I'll go back in and buy. But if not, hey, it's in a downtrend, I'll sell. Great, then you sell. Oh, price is back at demand again. Let me buy back in. So I'll go back in and buy. Great. And you're seeing it like every candle you're seeing at this point in time has force. I will hold. Great. There's more room to move. Keep holding. And then the thing that a person needs to do is to be in a state of being patient. Depending on the time frame that you're using. So longer term time frames, then you need to be more patient. Individuals who are impatient, there is something that is connected to him being impatient. Maybe, once again, impulsiveness, some form of anxiety. Anxiety, impulsiveness, anxiousness, these are all negative emotions of something a person thinks way too much and it hasn't happened as yet. Can you get rid of those? Absolutely. Easy. Basically in a flash, you can change it. So, but not unless or until you are in the present moment, which is happening right there, right now, then you'll be able to control what you can control. That's it. The future, you cannot have any control. We don't have control of the future. So where can we control? We can control anything and everything within the present moment. That's it. No more, no less. And that's the key. So, well, I hope you enjoyed today's session. Do you have any questions?
No, very good.
Yeah.
Yep. Thank you.
You're welcome. So as a form of an exercise that you do before trading, do the simple meditative exercise. Practice being present, practice being in the moment. And then when you're trading, practice what you're seeing there right now. Okay, great. I'm going to take my money right now because tomorrow I don't know what's going to happen tomorrow. If I miss it, well, so what? Who cares? I'll go back in again when the time comes, or I'll short it. And this is where different strategies that can be implemented part of your plan, right? It's like, what sports did you play again? Or what sports do you play, Eric?
I play table tennis.
Yeah. Table tennis, it's so fast that you have no room for thinking. It's just reaction, correct? Yeah, for trading, unfortunately, even 1 minute time frame, you have 60 seconds of pure thinking right there. You would be able to, you can micromanage every single trade right there that goes against you within 60 seconds. Any form of thought, any form of feeling, any form of worry, any form of negative emotion can impact the decision-making process of making a choice whether to buy or sell within that moment. Right? Cool. All right, Eric. Well, enjoy your day. And if you have any questions, let me know. In regards to